So I would like to go back to your role as a PLSA Chief Executive, which you had for over 10 years, right? Based on your experience, it would be useful if you could tell us how you will describe the ultimate objectives of this role, as well as the major shareholders of the PLSA.
So the Pensions and Lifetime Savings Association is the UK's trade association for workplace pension schemes. So the PLSA's heritage is in defined benefit pension schemes, but certainly over my tenure it was very important to the future of the organisation, but also important to me, that it covered defined contribution schemes much more visibly, given the change in the marketplace, but also as part of that, of course, covered auto-enrolment, and in particular was seen to embrace those parts of the economy that hadn't been covered by workplace pension schemes before, which auto-enrolment was really all about. So the PLSA's members were its 1,200 members who are company pension schemes, but also advisors to asset managers, to pension schemes, and so on, so actuaries, investment advisors, and so on and so forth.
How did you view the setup of an independent commission for pensions to address the persistent pension issues back in 2000s? What were your initial thoughts about that?
So my interaction with the Pensions Commission predates my time at the PLSA, or NAPF as it was then, when I was working for the Association of British Insurers. And it was very, very clear that there was a huge gap in the market. Those who were lucky enough to be in a workplace pension scheme were doing pretty well by and large, but huge amounts of the workforce had no access to a pension scheme whatsoever. It was also very clear to me personally that in order to address that problem, it was important that there was something or somebody independent who could really address the key issues and take the politics, if you like, out of pensions. And so establishing the Pensions Commission was a very, very important initiative. And I think establishing that as a small commission with just Adair, Jeannie, John Hills was the right way forward, because it meant that even though they came from different backgrounds, with Adair with his former sort of heritage in the CBI, Jeannie with her union background, John with that academia background, really again meant those debates could happen in a sort of non-political, non-party political, but also non-partisan way. So it was really important that the Commission got off the ground, and I think those three in particular were the right three people to take that forward.
Why do you think it is so important, based on your experience, to take out the politics?
Part of the problem that we've had in UK pensions is that the pensions, and other people may have said this to you, pensions have become a bit of a political football, and that creates very short-term policy solutions. But if we were ever really to solve the pensions crisis, or the looming pensions crisis, because the Commission said there wasn't actually a pensions crisis, but if we didn't do something there would be, that required, and still requires, long-term political decision-making. And therefore it requires solutions that can bridge the political divide, whether that's unions, employers, so small P unions, employers, whether that's party political, Labour, Conservatives, and other things that sit in other parties that sit in between, so that there is that long-term consensus. And I think part of the success of the Commission's work and the success of what then followed in terms of auto-enrolment as a policy solution are testament to the fact that actually we have got that political consensus around auto-enrolment as a solution. We've seen lots of stuff that's happened since auto-enrolment that has been short-term political fixes, short-term, some might say electioneering and pandering to the electorate in terms of policy solutions, but actually auto-enrolment needed to be something which had a long-term political viability.
What do you think motivated the government at the time to decide and establish a commission for pensions?
I think it was that realisation that it was just going to be untenable and untenable to the public finances to have half the workforce with no access to a company pension or some sort of workplace pension scheme. Given the ageing of the population and giving at that point the trajectory of defined benefit pension schemes, although the Commission didn't really look at DB pensions, we were, as the Commission said, going to face a very, very significant pensions crisis. And economically that was untenable, politically that was untenable, probably electorally that was untenable. And so it was very, very welcome that was recognised.
What factors do you consider as key factors for the realisation of a wide consensus among many stakeholders?
So I think the way the Commission went about identifying or getting to a position where they could say, here is a solution, was very clever. So they spent a long time trying to scope out and articulate and size the problem and getting everybody to buy into that. So I think once they had gone about saying, yes, there actually really is a problem, and here is what it looks like, here's who is affected, here's the size of it, and here's what happens if we don't do anything about it, was very clever as a sort of first step, because it then became something which was, you could actually see the elephant there in the room, and you knew that actually you couldn't ignore the elephant. And so getting everybody to sort of buy into that was very clever as a first step. And then looking at what the potential solutions were and buying everybody into that as a second step was actually a pretty smart way of going about it. Almost scoping and sizing and articulating the problem became something which you kind of couldn't argue about. You might be able to argue around the margins of it, but actually at its heart it revealed something which everyone went, yeah, okay, we kind of get that, and we need to do something about it. So it was a very sort of smart way of pulling everybody into, therefore then working together to arrive at a solution. Now clearly that was more difficult and trickier, and the final outcome was inevitably a bit of a political fix. So, why was it 3% employer contributions were written on the face of the bill? Well, that was to keep the employers happy. What was it that was going to keep the industry happy? Well, there were sort of certain packages of reforms there, and PLSA was part of that in terms of putting some solutions around market entryism and all those sorts of issues, and just making sure that company pension schemes wouldn't be dumbed down. So ultimately it was a political fix, but sort of ultimately everybody came out of it feeling that their issues had been addressed, and therefore everybody could kind of live with it.
How important do you think was the reform of the state pension into a more generous one, with the earnings link, in securing this consensus? For example, I have seen a memorandum sent by the PLSA and Pensions Committee 2005-2006. It was stressed that the success of these reforms extensively relies on the implementation of the state pension reform.
They go together because, by itself, and Turner was kind of pretty clear, or the Commission rather, we shouldn't call it Turner, the Commission was pretty clear about this, that, the package was going to deliver a 45% replacement rate or whatever it was for somebody on average earnings, with the bulk of that, 30% of that, coming from the state pension. So it needed to come as a package. So it was important, and there had to be a stable bedrock for auto-enrolment to sit on top of.
What we have seen from the interviews we have conducted so far, we have seen that auto-enrollment reform was accepted by all stakeholders. Why do you think this was the case? And if instead of auto-enrollment there was a hard compulsion, would that have been too radical to be accepted by all?
I think probably compulsion would have been too radical, and again this is part of the sort of genius of the way the Commission put their final reforms together, if you like, that it was quite soft compulsion. And I think there probably would have been a bit of a reaction against hard compulsion, sort of Australian-style hard compulsion, for a couple of reasons. I mean, one, we're very British and hard compulsion isn't kind of the way we do things. You know, they have compulsory voting in Australia and they do lots of things compulsory, which we don't. But also because of the way the state pension worked and the interaction with means testing, probably compulsion wouldn't have been the right way to go forward at that time. And there was also a big debate about the fact that, you know, we have a very significant level of indebtedness, and therefore was it correct to force people to save into a pension when actually paying off debt and credit cards might have been a more sensible thing to do. It might on the one hand have been simpler to say, well actually, you know, we've seen compulsion works in Australia, so therefore let's just go down the compulsory route. But it probably would have been a harder sell in any case. And actually, if we look at the results of auto-enrolment, we see, you know, very, very high retention rates, you know, very, very low opt-out rates, even with contributions going up now to sort of 8%. Opt-out rates have ticked up sort of marginally, but not hugely. So did we need to go, you know, even now that, you know, some people say, well, you know, we should just go the whole hog and go full compulsion. Actually, do we need to do that? Possibly not. So again, you know, it was soft compulsion was the right solution for that time. And certainly, you know, at the PLSA, one of the things we said was we don't think hard compulsion, or said at the time, hard compulsion wasn't the right thing to do for all those reasons that I said, you know, levels of indebtedness, ensuring that people who do need to opt out can opt out. But of course, because the real auto-enrolment route, that again was part of the fix and part of the solution, and part of that consensus building at that time.
So it was more in the interest of the members to go for a soft compulsion, while for the pension industry it would have been better if it was a hard compulsion, for example, or not?
I think it's probably been overemphasised. I mean, you know, yes, it worked in the interest of the members because it did give a sort of pressure valve thing. Might it have been in the interests of the industry? Possibly, but those who might, equally the industry might have said, well, it might have meant taking even more smaller pots kind of thing. So I'm not sure it was really a debate about the industry so much as a debate about what would have been right for the member.
I would like to go back to the creation of a national pension savings scheme and to ask you why in the beginning the NPSS idea was characterized as Stalinist, a fourth national pension, or more generally that it won't benefit scheme members.
I think that may have been my predecessor at the PLSA who might have said that. You know, the very first iteration was that there should be one of these things and it should be the NPSS and it would sit on top. So it would have kind of been a quasi-DC thing sitting alongside state second pension and so on and so forth. I mean, that was where the industry, and in particular the insurance industry, the retail industry, did get particularly exercised, as you know. So I remember, I think it must have been Stephen Timms in one of his incarnations as minister said, well, we'll have this, he didn't quite call it a competition, but we'll have a competition to see what could come about instead of a single NPSS. Because clearly the insurance industry wanted something that looked a bit more sort of market-oriented with lots of players. The Commission was saying not, and the NAPF as it was at the time was saying, well, actually what you want are 6 or 8 kind of big players so you could really get scale, and you really want them properly authorised, and you really want high standards for the people who are going to be trustees of those schemes. And that's kind of now where we are with master trust authorisation, when everyone's realised there are too many master trust, 80 some. So there are an awful lot of players who entered the market, and we're now sort of retrenching from that, and master trust authorisation is one way of doing that. But certainly the NAPF at the time was saying what you want to do is to have what we called constrained competition, so 6 or 8 master trusts, very high standards of governance, some sort of capital reserving, and a regime that looks very much like the master trust authorisation regime that we're all just going through at the moment. And I suppose where we came out was Nest as the default with others sitting alongside it, but nobody envisaged then that there'd be Nest, as it came to be known, plus 80 odd organisations that were sat alongside it. And I think everyone would agree in retrospect that having 80 some organisations is far too many.
How this, what are the current scheme landscape on the scheme members? What do you think?
Well, I think for the scheme member, clearly the choice of master trust is the employer's choice. But the concern was what would happen if some of those master trusts folded or collapsed and there wasn't enough money to actually pay out benefits, or that the members' pots had to be dipped into in order to pay up, to wind the scheme up. And a recognition that actually some of these master trusts, because they couldn't get scale, would not actually be able to offer a good enough value for money for members and not have the governance standards that members deserve and really need to sit around master trusts. And I suppose as those conversations were going on here, we could see what was going on in Australia, where the system had been running for much, much longer, but again, it started with a very large number of players, and that number's been coming down over time, driven by government legislation to drive value for money. So I think that really was the concern for the member, that they could be disadvantaged by having, if they ended up in a master trust that was poorly administered, poorly governed, couldn't provide value for money.
How it got accepted by the industry at the end? Was it that Nest will coexist with the existing pension infrastructure, so there will be Nest and the other big insurance companies, and Nest will absorb the non-profitable customers? So these were the two main reasons for which it got accepted, or there was something else there?
I think there are a couple of reasons. One was it wasn't going to be the only game in town, so there could be Nest plus other master trusts, and we've seen other big players come in. So I now chair one of the other big master trusts around. So new players came into the market, so other operators sitting alongside Nest. But going back to the fundamentals of the Turner Commission and and the Commission's view that the market has failed, giving Nest that public sector obligation to take all comers, regardless of size. Because what had clearly happened was that the traditional market wasn't set up and didn't want unprofitable business, whether that was low-paid workers or whether that was very small employers. And so, what that did was partly force the market to reevaluate itself and really think about what it was there for. But with some of the new players coming in, willing to take, as Nest does, anybody, that then opened up, new options for low-paid workers or small employers. But to the acceptability, it was that there isn't going to be a single MPSS. There will be what's now Nest plus others, but with Nest having a public sector obligation to really get to the crux of Turner's market failure point.
Also because this was in exchange with a more generous state pension that will encourage private saving in the long run.
Yeah, and I think so there's a sort of infrastructure of more generous state pension and auto-enrolment. and how Ness sat alongside other players in the market. And then there was also the adequacy point. So, you know, how much was going to be contributed through auto-enrolment and its interaction, therefore, with the state pension. So there's sort of a number of dimensions to how it all came to be accepted, but it was really how the package as a whole came together. So what the quantum of contributions was going to be and how that was going to be divided between employers and employees, how the landscape was going to look, so state pension, an entity with a public service obligation to take everybody, and what then sat alongside that, whether that was organisations from the traditional market or new players coming into the market, of which there have been a number. And all of that sort of came together to be accepted. So, you know, there were what we might call in the trade union movement when I worked there, you know, full and frank discussions about what the level of contributions was going to be. There were lots and lots and lots of debates, and I wrote lots and lots of papers at the time, because I was Director of Policy then, not Chief Executive at the NAPF as it was, about different options for contributions, different options for what the market should look like, different options for how many players there should be in the market, and what the role of an entity with a public service obligation should be, and what the regulatory framework that sat around that should look like. So there were lots of sort of... So everybody was on board with the direction of travel, and there were little sort of debates and skirmishes along the way about the detail, but I don't really think anybody deviated from the need to do something. You know, I think the small employer groups kind of came on board ultimately. So, you know, everyone was on board with the direction of travel, but it was just kind of how we were going to get there and what it was going to look like, and who should pony up for which bits and who should have to do which bits.
Okay. The reason that I'm also asking you is because in other areas of social policy, like social care, we don't see this.
What's going to be the pension commission that solves the social care crisis? And you know, that is something that everyone's been asking for the last decade. And you know, I suppose Deal Not was maybe a sort of foray into that, but didn't quite get the same purchase for various reasons. And you know, maybe part of what meant that the Turner Commission could land well was the political environment at the time. You know, if the Turner Commission had been reporting into today's political environment, it may have got very different reception given different economic environments and so on and so forth. You know, if you remember back to when the Commission was reporting, you know, the economy was looking pretty good. We were sort of at, you know, near full employment, markets were going up, wages were going up. By 2012, of course, we were in a very different environment. People hadn't had a real wage increase for many years. We've been through the financial crisis, and despite all of that, you know, it was still very, very successful. So it maybe was helped by the political environment and the economic environment into which it was reporting.
Do you think it is also that there is something with the pension provision that for some reason helped to achieve this outcome?
We don't, any of us, know if we're actually going to need social care or not. You know, are we going to get run over crossing the road and that will be our lot, or are we going to need social care? Whereas we kind of all know that we are going to need pensions, and so philosophically perhaps and in terms of getting the public on board, there may be different drivers. It clearly is the next thing crying out for a Turner Commission.
So do you see pension freedoms as contradictory to Turner reforms?
Well, you know, I think on the one hand, if you are saying that we need automatic enrolment because people aren't equipped to make the rational economic choice to join a pension scheme, But on the one hand, we're saying when people get to age 55, they're sort of suddenly homo economicus and they're, you know, perfect rational economic decision makers, and they can decide to become their own actuary, independent financial advisor and investment advisor. So they will have been forced in at the age of 22 into a pension because they're incapable of making decisions by themselves. But suddenly at the age of 55, they're capable of making all of these decisions and have, you know, knowledge about their life expectancy, their choices, and their investment preferences. That's kind of quite a long, you know, that takes some kind of imagination. So certainly I think it probably is contradictory. And you know, just after those reforms were introduced, I went down to speak at a conference in Australia. And it was a conference about infrastructure, so it was in pension funds, so it had nothing to do with this whatsoever. But I was asked lots and lots of times, you know, how can you square a circle which on the one hand has got soft compulsion because people don't make decisions and people won't choose of their own volition to save for retirement, but on the other hand, just say when you get to 55, you can do what you want, you can buy a Lamborghini, it's your call, and expect people to be perfect decision makers at that point. So, you know, it was a view that was fairly widely held.
The PLSA has often made the case for a permanent pensions commission. Why do you think this proposal has not found yet any fertile ground, despite the significance of having long-term oriented pension policies?
Well, I think we should make it clear, and probably make it clear at the beginning, that I don't speak for the PLSA anymore. You know, the PLSA and other organisations have made the case for...
Also, the Commission suggested for a...
They did indeed suggest a permanent pension commission, and the PLSA have made that case in a number of guises, as have other organisations. Why hasn't it been taken up? I suspect because politicians quite like to dabble and to take control. Do I personally still think it'd be a good idea? Yes, I do. I think it'd be a good idea if, you know, there was somebody, a bit like the Local Pay Commission or the Monetary Policy Commission or the OBR, who can say, you know, are we on track? Who's missing out? Who's not? And, you know, we've had sort of temporary little commissions. So we've had 2 reviews of automatic enrolment. Now, almost doing a sort of quasi commission about, you know, who's missing out, who's not, what are the next set of reforms that come after auto enrolment. So we do that kind of by the back door, but it'd be much better if we just had a set of people who could do this on a permanent basis. And again, you know, take some of the politics out of this so we can carry on this consensual basis that's existed over the last 10 or more years.